Hey, everybody. I think we are live. I'm Jen, your host of Blockchain Banter. Thank you so much for joining us for Trading Crypto, Mastering the Market. I'm here with Crypto Choreo, data scientist and narratives trader, and what I always consider to be a Dune dashboard genius extraordinaire here. He's going to show us a little bit about that throughout the call. Along with Keith Allen, TA and algo trader, order book analyst, and co-founder of Material Indicators, and Dr. Mark Richardson, project lead at Bancor and creator of Carbon DeFi. Thank you for joining me, you guys. Choreo, great to have you back. I know you weren't able to join us last week, but it's good to have you back with us. I wanted to start with you this week, and maybe you wouldn't mind giving us a little bit of your Dune dashboard, what you're seeing with the narratives and things. Are you able to share your screen?
Yes, let me share the screen. Hello, everybody. I missed you last week, and here we are.
We missed you
this
too.
week. So, can you see my screen? Let me know when you can see my
You know
screen.
what? Hold on one second. Let me bring you up here. Now we can see a
Perfect.
lot of us.
Perfect. So, shall I stream this? Stream this to your audience. You're in the process of logging in. Let me just start streaming here on my YouTube as well. Okay.
Well, now we all know that if you want to watch a replay, we can go to Crypto Choreo's YouTube.
Yes, this is my
You might
YouTube
not
channel.
have the first couple of minutes, but you'll have the rest of it.
By the way, I'm really happy to show that the very first video that we did on the YouTube channel was with Mike 8 months ago on Banker and AMMs, etc. So if you haven't seen this video, I highly recommend it. And okay, am I live here? Connect streaming to go live. Anyway, maybe I will. I don't know. Is there anything I should do here?
I don't know. Maybe we'll hopefully figure out the kinks for next time.
Okay, so let me start with my analysis and then hopefully we will figure out that at some point. Okay. Let me start with some comments on Bitcoin, what happened in last week, my views, and then we go on the narratives and what we see on the what is trending on the narratives, etc. So let's quickly draw some patterns here. We broke all-time high from last time. Here we are since now 4 weeks above that all-time high. So that's first confirmation where we haven't been rejected on the weekly time frame, which is a strong time frame that I always refer to. And we've had some pullbacks or retest of the previous resistance as a support now last week actually. And so if we were talking about buying the pullback, and so we had now, I think, here a good pullback last week, which I personally used this opportunity to buy, and I also shared it with my community here. We had a like 17% pullback, and we mentioned we talked extensively last week, about what kind of pullback shall we expect in a bull market environment, and how low can things go, etc. But as you know, I have very bullish biases, at least for this year and next year. And so I'm pretty okay taking risks and buying, whatever dip comes. And if you look at the price action from 2023, what you would see is that the pullbacks that we've had in the last 15 months, which is a pretty long time frame, for the market structure, for the uptrend, the market structure that we are seeing here, is that we have pretty shallow pullbacks. I mean, nothing above 30%, as you can see on Bitcoin at least, compared to this horrible price action that we had in the bear market. So clearly an uptrend, higher highs, higher lows. If you zoom out enough on daily time frame, consistently putting higher lows, higher highs. So really an uptrend and no signs of stopping for now. And we've also talked about catalysts that are continuing with ETFs, with funds putting and announcing actually more investments into crypto. We are seeing the investments from VCs making new highs. If you go on DeFi Lemma raises, for example, that's a pattern that you can clearly see here. We compared to what we had in 2023, we are clearly going in an up, it's going slightly up. So, this month, for example, we had almost 800 million in investments from VCs in crypto. Compare that to something like October, just 6 months ago, where it was 300 million. So you're above 2 times what we had previously. So price action is bullish, on-chain metrics are bullish. The current timing in terms of where we are with the cycle and halving is very bullish. So I remain completely bullish with my bias, and therefore I trade like I trade a bull market, which means any pullback more than 10% for me is a great buying opportunity. And so we had one last week, and actually we have to consider ourselves lucky to have these opportunities, because that's when you get the best risk to reward in terms of, maybe at some point it's we have some overextension. And I've mentioned this a few times, but look how momentum indicators can reset really nicely without having really a strong correction in price. So as you can see here, if you just ignore the price action here, ignore the the percentages, and you just look at this trend is very healthy. And but the momentum indicators, was reset from 90 all the way to less than 50. So that's a really good reset. In fundings as well, if you look at the fundings, they were really high. Now everything is back really nice. As you see, in terms of price, we are not too far from the all-time high that we did recently 2 weeks ago, but the RSI is now much lower, and you can see that if you look at other indicators as well. So that means that, that's the kind of patterns that you want to see in a bull market. The reset is mostly a reset on momentum indicators, not really, not always, at least, let's say, in price. So everything looks bullish. The outline for the next weeks is pretty positive. However, let's go and look at the charts for narratives. But before going to narratives, I would like to show you this seasonality effects that we have in crypto. So let's maybe have an outlier here. Let me remove the mean to show you the median. So as you can see here, we are seeing the performance of all narrative related assets, more than 200 established projects in crypto since 2017. And so what we are seeing here is that on average, median, we have a usually since 2017, we have a very strong start of the year for the first 4 months, with April being the most bullish, not almost, but the most bullish month of the year, considering the median. And so this is, we've had a very strong Q1, we've had a strong Q4 in 2023, and it has also happened in 2021, 2019, 2020, and the same for Q1, even in the bear market, of 2022, and last year in the, let's say, accumulation year of 2023, Q1 was very bullish, if you remember. So Q1 has been great. We are coming to an end of Q1. What can we expect in Q2? So going to the quarters here chart, as you see, the Q1 is by far is the most bullish quarter of the year. And then Q3, we know that it's bearish, and Q2 now is obviously not as bullish as Q1 and not as bullish as Q4, but also not as bearish as Q3. So now if we zoom in what's happening in Q2, it's interesting because the first month being April is usually, as we said, is the most bullish month of the year within this metric, but May and June are more bearish, especially May. If you remember 2 years ago in May, That's when we had, Luna crashing.
That one was brutal.
Yeah, it was brutal. In 2021, in the middle of the bull market, we had a very strong dump of 20-30%, caused a lot of liquidations, etc. We resumed month later, but May was really bearish. So
of course, there's that TradFi cliche that says May go away.
Yes, May, and we say something similar with September, right? And it's interesting to observe the same patterns that we are seeing in TradFi and that are pretty well known also in crypto with the data. So very interesting to me, but I respect that because this is a pattern of now over 7 years, and we have more than 200 assets. So, if the average of 200 assets are showing us that May and September are bearish month and April and Q1 are bullish month, this is something that I certainly want to consider in my bias, in my risk management, in my positioning, etc. So I remain bullish for April. However, I know that in terms of seasonality, we might be coming, to some kind of we might see some bigger corrections in Q2. However, we know that the halving is coming, and so this is just one part of the equation. Now let's talk about the other part of the equation, which is the cycle. So in terms of the cycle, if you zoom out now to the 2 weeks, let me remove all these things and let me go on something that gives us a bit more material. So here we are. We discussed, this is the chart that we did during some of the last weeks. And so we mentioned that there is always this retest after breaking the previous all-time high. It happened, in 2017, 2021, and it also happened, we are seeing that even on the 2 weeks, that's a pretty nice pullback that we had. And even here, we had something pretty similar, in terms of a lower week, which was really both quite fast. And here you can see something similar where we had a very small body candle, kind of a doji candle. And then here we saw a bit of also, not too bearish, but that was also some retest of the previous resistance into, and then it was tested as support, and then we went higher. So now we are in this kind of part of the cycle. This is very important. And if you look at the 4-year cycle thing, that happened. When did that happen? That happened in 2013 October, and then that happened 4 years later, approximately, and then that happened in 2020, and now you're in 2024. So the 4-year cycle has been working amazingly, both for local tops or even global tops and global lows within the cycle. So again, this is another confirmation for me. We discussed about seasonality. Now, even in terms of the cycle, we are pretty bullish considering the halving and all these things. And then we also have catalysts backing this up. We have Fidelity, we have BlackRock, we have all these funds and institutions buying. Now let's talk about narratives, because there is something related to that. We have real world assets that are the second best performing narrative of the month, and then look at that, actually how close they are to memes, which are the first one. And then just a few days ago, actually, I shared about real world assets. They were like 80% up, and now they are almost catching up to the memes, and
wow.
it's even possible that they will overtake memes. And then I actually tweeted about that recently. So this phenomenal strength, where is it coming from? It's because of BlackRock that announced its tokenization fund on Ethereum blockchain like a few weeks ago. And then since then, there has been a lot of bullish momentum on real world assets. We know that this is by actually what even institutions and banks have said. This is a multi-trillion-dollar industry, real world assets and tokenizations coming to blockchain. This is solving a real problem that Web2 has in terms of tokenization. And so this is maybe one of the most credible use cases that crypto and Web3 might found, in my opinion.
I was just going to say that's probably the most significant thing that we've heard in terms of a real use case at scale.
Absolutely. So, we've been always saying fundamentals doesn't work in crypto. Look at the memes, being the first best performing narrative of the month for now, few months. And, we've been seeing that pattern, but now it's really nice to see in terms of adoption, for our space and recognition from, institutions that, and this is a technology that answers problems. We are, obviously all very happy to see this narrative, especially because of what it means for our industry and for the upcoming years. So now if we look more specifically into real world assets, Ondo, which is one of the assets representing real world assets, which BlackRock has exposure to, has been having a great month. It's very close to its all-time high. And if we look further, I mean, if we look in the real world assets category now, let me go here. Yes, here. So here we can see different real world assets. Let me zoom out a bit. Okay, as you can see, first of all, all these assets compared to Ethereum, that's important. The benchmark is Ethereum. Look at, this uptrend on all of these assets, like, Goldfinch, since March, start of March, like 3 weeks ago, 2 weeks ago, Maker as well, very big on real world assets, Maple, Truth, TrueFi. As you can see, everything is positive here, from real estate, platforms tokenizing, real estate and bringing them on chain, to credits and everything corresponding to real world assets. We are seeing a very strong momentum. This is something that we've observed using my narrative. We could observe that really this shift to the left, as I call it, when you have a narrative which is usually somewhere within this chart, and then because there is a catalyst for something happening, it starts to move to the left slowly or quickly. And this is exactly what we observed with real world assets. If you look at the real world assets history of narratives, here, real world assets, RWA, you can see the last time actually it had a good performance was in November, so a few months ago, where it was the third best performing narrative. And before that, it had few good months in 23, but not too many months, like just 3 months. And then during 2022, the bear market, just at 1 or 2 occasions. So now this is a very significant thing, because now real world assets, you see that it doesn't often appear in the second position. Now it's in the second position, and as we said, it might even finish in the first position, which would be a first time happening. And then, as I've said, usually when these patterns happen, there is continuation, right? So we don't expect, I don't personally expect this is to be this to this being a quick pump and dump thing. I think there is a clear trend here. And even if we look now, we are coming to a close of Q1, and even if you look at the performance in Q1, since the beginning of the year, look at real world assets already outperforming the AI narrative, which everybody is talking about, and by quite a lot, right? So this is a pretty significant change. Of course, memes, they are still, they are very volatile. But if we ignore memes, real world assets among 30 narratives is the best performing narrative of the year and of this month. This is very bullish for what it means for our industry. That being said,
2 questions for you, Corey.
Yes.
Number one, just looking at this chart, like in my opinion, if and when real world assets flip memes, then we truly have validity in this market, right? And in my opinion, just because memes are, they are what they are, and RWA is what it is. But more importantly, do you see that this only lives in the ETH ecosystem, or do you think that over time, especially with some of the things that that Mark had clued us into, that he heard about, development, upcoming development on the Bitcoin blockchain that could facilitate some of these things?
I think that I think for now there is a lot of liquidity on Ethereum, and that's why you see most of these real-world assets being on Ethereum and not on other blockchains. But one of the challenges in real-world assets is the question of the legislations and regulations. And so this is something that a lot of projects are working on, but I think for now, we should expect to see things continuing to be on Ethereum for now. And because that's where the most of the liquidity and most of DeFi activity is. For now, most of the activity going on other chains, including Alt L1s and Ethereum L2s, are mostly for degens and trading meme coins where on chains where gas fees are low.
Thank you. Thanks for that.
I'm going to bring up a comment really quickly. Corio, I know that you have to drop. I'm so glad that you were able to take the time that you did to join us again today, and to share all of your thoughts and your data with us. Thank you so much. Really quickly, because we're on narratives and news and things, somebody just made a comment. I'm going to share it here. Can you guys see when I share these comments that our listeners, our audiences?
Yes, I can.
Yes.
Okay. So I don't know if you guys caught wind of this. I think this happened since our call started. Maybe it'll have an effect on us.
I mean, KuCoin is not, if you look at the liquidity on KuCoin in terms of its ranking on how it compares to other exchanges, is not really a very, it's not one of the biggest exchanges. Again, I think on DeFi Lemma, you have something here on success. So you can see here actually the assets. And if you look at KuCoin, it's number 9 with just 4 billion in assets compared to, Binance 118, and Coinbase is not listed here, but Coinbase is the second one. So KuCoin is, I'm not really worried about this thing. There has been a lot of regulations on the biggest players, especially Binance, during the bear market with CZ stepping down. That was, I think things are in much better situation compared to where we were 2 years ago, after FTX. I think after the FTX, the industry was completely, shaked, and good things happened after that in terms of exchanges realizing that they should have more transparency. We saw proof of reserves and other good things happening. So 1 or 2 exchanges might always go down or have issues, but this doesn't concern me too much.
Than we've seen in the past. Yeah.
Yes, in my opinion.
Cool. Awesome. Well, thank you, Zach, for sharing that with us. Corio, again, thanks for sharing your even then, last thoughts with us. We will definitely catch up with you next week.
Sure. Yes.
Awesome.
Happy to see you next week, and hopefully I will figure out how to live stream with my audience as well.
Yes. Yes. We'll get together offline and get it all sorted.
Amazing. Okay. Have a good continuation, guys, and talk to you next week.
Thanks, Corio. Great stuff
as
always.
Thank you. Bye.
Okay, Mark. We'll see ya. Mark, I want to hand it over to you. I think this fits. We had a call maybe a couple weeks ago where it was just you and I. It was a continuation of one of our trading calls, and you had shown me, and our viewers then, kind of this unique sort of way of trading, right? A little bit out of the customary, I'm trading against my stable or I'm trading against ETH. I want you to kind of run through that a little bit with me, if you don't mind. I know we went a little bit over with Corio, but I also want you to, I know that Carbon DeFi had a new feature release this morning that I don't think has even been announced yet. So maybe you can show us a little bit of what that is as well.
Of course. Yeah,
okay,
I've tried to share my screen. Do you need to approve that?
I'm adding you. Yeah, I just saw us. So, okay, there we go.
Perfect. Yeah, happy to. So let's begin with some of the meme tokens that that Corio was discussing. So you can see all I did there was, after you arrive at the app, we've got this this simulation resource that's been available now for a few weeks, and we're constantly improving it. And so what I wanted to bring attention to is that things don't always trade very well versus the US dollar, especially during an uptrend. And people like Keith and I, we're really looking for volatility opportunities. Buying and holding is, I'm sure, something that I don't want to put words in Keith's mouth, but it's something that we both probably do. But the bread and butter of how we like to navigate these markets is looking for opportunities to flip assets for a profit. And in general, this is how traders think. And so let's have a look at some of the most popular meme tokens, something like Floki, for example. So this chart, in my mind, is untradeable. This is something that would be very, very difficult to flip consistently. It's a relatively good hodl, it seems. This is an enormous improvement. And there are a lot of tokens that have this kind of profile. So things like Pepe, for example, this is in one of the most popular meme tokens of recent months. And again, it's got this ridiculous spike to the upside that makes it very difficult to trade. But really, it's about trading it versus the US dollar that makes it difficult. So one of the things that we support, and it's relatively unique to Carbon, is that you can create the price chart denominated in any token. So I can flip this around and compare Floki to Pepe, or have Pepe denominated in Floki. So it's important here that we're saying that we're buying and selling Pepe with Floki, which means Floki is essentially the numeraire that we're choosing to denominate this in. Or the cash token, or the quote token, if you prefer to speak in those terms.
And this is already a big development, right? Because you can't trade this. You'll never find this pair on any centralized exchange, right? But
exactly,
you have the ability to create your own pairs.
Yeah, exactly right. So if you go to Binance or something, you'll never find the option to trade Pepe versus Floki in any direct way. And this is predominantly because they rely on centralized market makers to create those markets, and they're only going to do it in either stable coins, directly in USD. Maybe they will let you trade it versus ETH in some situations. Binance actually has a lot of token pairs versus ETH. But even then, versus ETH is relatively untradeable in some of these situations. So if we compare Pepe to ETH, again, this is a very unattractive chart from a trading perspective. But versus other meme tokens, yes.
I do have some questions coming in for you also. So before we just keep that in mind as you're going through this,
Yeah, please feel free to pass them on. I'll answer some
as you explain this. You know what? I am going to share this one. We've got another one from Zach, and we've got one from Obo also. But I'm going to wait for Obo until after you run the simulation. So he's asking, basically you just swap, right? So as you're explaining this sort of back testing, like this simulation that you're going to run, maybe you can give a little bit about what Carbon DeFi actually is for someone who thinks that it may be just swapping, in terms of the orders that you can create and how that actually works as well for Zach or for any of the other viewers who are curious.
Yeah, fine. So Carbon DeFi is a price quoting protocol. So it's not an AMM. But it interacts with other AMMs, right? It becomes a part of the landscape of the liquidity of the chain that it's deployed on. And so what we're doing here is, I'm choosing these range boundaries so that we can simulate what would happen if the market was efficiently interacting with our price quotes. And so, if I wanted to enumerate my prices, really wide like this means that I am offering Floki in exchange for Pepe between these price bounds. And the way that the protocol does that is essentially creates a very, very large number of discrete limit orders all the way through this range so that you get a geometric sequence. But that's probably a little bit too much detail. The most important thing is, what would happen if we were doing this? So what I'm going to do is I'm going to say that we're going to start with, let's say 1, 2, 3, 4, 5, 6, 7, 8, 9 Pepe, just to choose a number, which is about $1,000, which isn't too bad. I'm going to start with 0 Floki. I don't have to start with zero flow key, but I kind of like to show off this ability to quote prices, even though you don't have those tokens yet, which is, again, something very unique to Carbon. And so what we're going to be looking at is, had we run this strategy since last year, how profitable would this have been just trading these two tokens versus each other? And this is, this is something I've spoken about in detail on many other calls. And if you want to know the mathematics of how we compute this, I can do that on a different call. But you can see what's happening is that it's essentially treating our asking and bidding liquidity separately. And we're basically just using the price data that we have to simulate what would it look like if your position was essentially 100% efficiently arbitraged versus the rest of the market. In some cases, that's not a great assumption if the tokens are like extremely, obscure. But Pepe and Floki are so ubiquitous that that assumption is perfectly sound. And so this is an important realization, is that 95% ROI that we're measuring here is denominated in Floki, not in US dollars. And remember, the price of Floki made this like ridiculous hockey stick shape. And so that ROI in terms of US dollars might be, profoundly higher. If Floki did 10x versus USD over that same time period, this ROI would look more like 950%, not 95%. So the difference there is pretty extreme. I also want to have a look at some of the other tokens.
Just real quick, Mark, since in that example, the Pepe is on potentially one platform and the Floki is on another platform, where is the price data coming from?
Yeah, so what we're doing, so we're bringing all this price data in from a combination of the CoinMarketCap API. We're bringing it in from the CoinGecko API and also the CryptoCompare API. The CryptoCompare one is the one that it's basically whoever's got the data, we will take it from there first. And once you've got them both denominated in US dollars, it's very easy to then, flip one upside down, remove the US dollars by dividing through, and then you get the price of them quoted in terms of each other. And this is a totally reasonable way to do it, because like I said, when both of the tokens are relatively liquid, the way that liquidity operates on chain is that there are different paths that you can take. So if there's a Floki denomination in ETH and a Pepe denomination in USDC, then you only need a USDC ETH pair somewhere else on chain in order to close that path. And that's exactly how the system operates. Okay, so there was another, I had one up before, that one of the real world assets that Corio was speaking about, I think was like RB something, or I can't remember what it was. Whatever. Let's just have a look at Rook. I don't know. Okay, not a good choice.
I think that was a good example.
Let's do ETH versus Mako. This is a very common pair. But the thing that I want to look at here is that if we were looking at just Maker in terms of USDC, again, very, very untradeable, because this thing is basically just trending to the upside, and so Maker looks like a really great HODL token, which is fine. But I would prefer to trade things because I think you can do a lot better trading than you can HODLing. And here you can see this is a much more attractive price chart because it's got these enormous, has this enormous volatility profile. And so if you started to see this, this kind of channel develop, and you can see that this is obeying like fairly good technical levels. We only have a year of price data here, but if you go back farther, these are fairly well respected price bounds. And trading Maker versus ETH is something that I think both the Ethereum, the Ethereum community and the Maker community would be pretty comfortable with. And so what I'm going to look at is basically what would have happened if we had identified these technical levels on this specific price pair and then decided to set up a strategy like this. So imagine here we are buying and selling Maker. And so what I'm going to do is going to put in, Maker is pretty valuable. So we'll put in you know, 1.23456, and I'm going to fund this with 0 ETH. And so what's going to happen is that as the price moves to the upside, we're going to be swapping our maker for ETH, and then we're going to be buying it again on the way down. And we're going to be continuing that way until the end of the simulation. So trading maker versus ETH on Carbon this way is an 82% return, or about 0.9 ETH worth of gains over that
over what period of time?
This period of time, we're beginning this simulation all the way back in March of 2023, but we actually didn't make our first trade until September of last year. So that 82% ROI is really just measured since September. So this is about an 82% over about 6 months. And again, denominated in ETH, which has also been improving in price in fairly dramatic fashion. Now, if you want to see, you know, like more of this, obviously, you can just go to the app. You don't have to do anything special. You don't have to connect your wallet to use the simulator. You can just use these things as they are, and just start looking at different token pairs. Like one of the things that I like to do is to try and find tokens that kind of belong to the same category. So, for example, Aave and Compound, people who have been listening to me over the years will know that this is one of my favorite pairs to trade, because they're both like highly reputable and successful lending protocols. So they kind of belong to that same category and they behave similar ways, but they have an enormous volatility profile. And I don't mind I don't mind taking exposure to Compound on the downside or whatever. You know, both of these things I'm relatively happy to collect. So let's just have a look at, for example,
Mark, keep an eye on the time too. I want you to be able to show the new feature also.
All right, fine. Well, I mean, the point is that you can have a look at these charts.
I just mean keep an eye.
Yeah, sure. Okay, well, let's go and have a look at Explore, and we can have a look at what people are doing. So because it's a blockchain, you know, there are no secrets. So we can have a look at all of the things that people are doing. Let's do, say, USDC ETH. Where is it?
Yeah.
Okay, so we can have a look at all of the different, you know, trading strategies that people have been creating. But the most recent addition, and again, this has just been live since this morning, is that we now scrape all of the events, and so you can actually browse all of the trading activity that's occurring on Carbon. And it should be pointed out that these transactions, these are passive, right? So for all of these strategies that we're looking at, when people have set these up, in some cases, with like 5 ETH, for example, they don't have to pay the gas to trade this way. All they're doing is quoting different prices and then waiting for the market to come to them. And so if we have a look at this one with $20,000 worth of ETH in it and click this little button in the top right, we can then have a look at all of the times, the market has interacted with that strategy.
Looks so good, so, yeah, Mark.
Right? Doesn't it look great? I'm really happy
does.
with our.
There's a lot of information there that I know the users are going to be really happy with. It's not just, the activity, but it's actually like the details of the activity. It's not just a trade was made,
Yeah, exactly. And this is something that's really helpful for people that spend a lot of time in DeFi. Especially if you've been here for a few years, you'll know that, accounting can be very difficult, especially when it comes tax time. And so being able to, export all of this data and, show something to your accountant that shows, exactly how you've been trading is extremely valuable. And so this is, I think, a really significant improvement to the, to the product overall. And you'll see as well, this updates every 30 seconds. So if you've got an active strategy and you're interested in seeing, how it's performing, you can always come back and just, watch this and see how it's doing. I'll very quickly just show as well a, let's say, USDC DAI or something. I'm sure there are some stablecoin pairs here. Yeah, so similar to Curve or whatever, Carbon does support stablecoin pairs, and it has an extremely small fee. I think 0.01 or 0.1 basis points. So that it's effectively zero. And because of the gas efficiency of Carbon, it can actually support relatively small trades. So, for example, this strategy only has $100 worth of stablecoins in it. Maybe this is someone who's just trying out the system, seeing if it does anything. And you can see, it is actively trading relatively frequently. This is just, I think, two simple limit orders. So every time USDC comes down 1 basis point, this will trade USDT for USDC, and then every time it comes back up to 1, it sells it, and you collect the difference. And so here it is trading, quite merrily. If we want to go and see some of those transactions on the Block Explorer, we can do that. That's the new Explorer feature, and I hope that this has been informative.
Really cool.
Yes, thank you so much. I know that it's something that users were anxious to see, and I know they'll be happy to have, especially because you can see it from, it's not just your strategy. You can do it as a strategy maker. You can view it, the activity within a specific strategy, within all of your strategies, or you could just go and explore what's happening just system wide, and then kind of go in and focus in on a strategy if that happens to catch your attention. So it's really nice that it kind of is presented in a few different ways for users and potential users to really see what's going on within the system. So it looks great, Mark. Congratulations.
Thank you very much.
You're welcome. Keith, I'm going to pass it to you. You're going to share with us your screen, I'm hoping.
Sure. Happy to do that. Let's see.
Mark, there were a few questions here also that I had answered. I'm encouraging everyone to go to the links page so that they can join the Carbon DeFi community, follow Carbon DeFi on Twitter. I think those are probably the two best places to encourage everybody to, obviously the website, right? To find out more.
Yes.
Yeah. Awesome. Oh, Keith, I see your screen is up. Perfect.
Okay, so I'm going to share. We're going to start out wide, okay, and I'm going to share a 1-year view of the order book here. And the first thing I want you to notice is where liquidity is stacked and where it has disappeared from. Okay, so lots to really analyze here in terms of that, and it's actually pretty simple. If you look at history, and we can take this, just first, let's just break this up right here. Right overhead, we have well over 200 million stacked above us, up to 75K level in ask liquidity. That's resistance. We can speculate on whether the technical analysis is going to work. We can speculate on whether the indicators are working. You see the liquidity clear as day. And so the path of least resistance at the moment now is obviously, it's easier to go down than it is to clear this. Now, I want to preface this by saying I'm still macro bullish for sure, right? But I'm looking, like Mark said, to find an opportunity to improve on my cost basis, and I'm wondering if we might not get a test down here. Now, what is significant about these levels down here? Well, we have a monthly close coming and a weekly close coming. Those both correlate on Sunday. So we'll show you where those lay on the chart in a second. But in terms of where how price reacts, or how price historically reacts around these brighter spots of liquidity in the order book on either side, I'm going to take it to the 3-year chart, and let's look at 3 years of history, and you can see that time and time again, price gets attracted to those bright spots like a moth to a light bulb, and then it can't penetrate and it gets rejected, and price goes the other way, right? And so we get liquidity up here, it comes down here, it goes up here, it's concentrated, it goes down. And it takes large concentrations to do this. You remember, Mark, back in January when I said, hey, we're starting to see, 200 plus million stacked down here in this 36 to 38K range. This is the kind of liquidity concentration that we often see big moves from, and it happened. But you can also see the times where large blocks of ask liquidity came overhead and knocked it down, right? Knocked it down. This set us back just a little bit. We consolidated here in this 52K range for a minute. Same thing with 58 to 60. I mean, we came through it very, very quickly. And then you see another bright spot, knocks us down. We regain some strength and come back up and test it. So eventually, I do think that price will push through this. The question is, when does that happen, and why am I focused on these other areas below? Well, number one, this is obviously the stronger area of liquidity, but you can see it's thinned out a lot, right? So we had at one point a nice concentration here of over 60 million here at the 60K level, and that's been first it was pulled, it was distributed into a ladder, and we can see that liquidity has changed. And if we apply some filtering here to just focus on the key areas, we can see what really matters in terms of the order book, right? I'm going to filter out the low levels of liquidity, and you can see just a hint, a little bit here at the 69K level, which is important. Why is that important? It's important because that's where our prior all-time high was. That's the RS flip we're trying to confirm. And if we drill that down a bit, you can see that we had so many failed attempts to get above that level. We cleared it, but we wicked below, which was a sign of weakness to me. We only had one full candle body. I'm looking for full candle bodies, both across all time frames, right? So we now have another attempt. We fell below the 21-day moving average. That's this green line here. We cleared it yesterday, cleared above the prior all-time high, and now we're trying to do this again. You can see today we already had one retest as low as 69,250. But for the moment, we're still staying above that, right? And we need to see this continue to print above, and we need to see the weekly close above and start to print. Of course, Sunday we have, the weekly and monthly close. So we could see a new monthly candle after the close that starts to print above this. And as long as we don't have wicks below it, I have confidence that we're going to continue to trend up. Now, in terms of how far we can go, I think that, obviously we talk about being in price discovery mode, but to be honest with you, this lifetime trend that I'm showing you, and you saw it here on the wider chart. Oh, sorry about that. You can see that historically, this channel held until this bull market, until this, the prior, the bear market that led us into this reversion. So we're trying to climb our way back into this. And this is a bit arbitrary. We talk about lines on charts. Everybody has their own method. So mine may not line up with yours, but this correlates pretty well for me at this point. So in my mind, until we break back into this above this is really where we enter a frontier of price discovery that could take us to God knows where, right? I mean, like just the midline.
Where are you at, Keith? For where?
What's that?
You said that'll take us into that like God tier territory,
right?
What number are we looking at?
This is complete uncharted frontier at this point, right?
Oh,
and we've heard all sorts of numbers, and 150 by the end of the cycle. We've heard 300s. We've heard $1 million numbers. You get there. I'm certainly not bad. Know that we're gonna feel like we're gonna go up. And even if we didn't make it into this channel, this cycle, we could chop our way up here. And, here's the halving. And, by summer, we could be up there in the 80 to 100K range. And, maybe that's it. Maybe we continue into next year and it's next summer. I don't know. That gets us at a pretty nice level, even if we don't make it into that channel. So this is kind of the glass ceiling that I'm looking at here. And this obviously changes every day. So at the moment, we know there's strong resistance at that 75K level. But to be honest, that's psychological at this point. 75K would have been technical right here, a few weeks ago, but every day this changes. So now that level's around 77K, and next week it will be higher. So that's kind of what I'm tracking in terms of where I think price can go and where we're going to run into resistance. And this is what paints the picture for me. We can see we have that resistance here, overhead, laddered up to above 76K. and then another block coming in the 80K range. And so with the weekend coming, okay, we have two potential areas to retest. And I look at where liquidity moves between now and then, right? If we see, what we want to see, what bulls want to see, what people who don't want to buy cheaper like me want to see is bid liquidity stacking around 69K. At the moment, we don't see anything really significant until we get to that 65.5K level and on down to 60. So let's go back to the candle chart for a second on the daily time frame, or on the weekly time frame rather. And we look at last week's close was at looks like about 67.1 on Bitstamp. Might be higher on a different exchange. I thought it was, but let's say even the high was at 68.9, just below the prior all-time high. So let's say that this gets challenged, on a retest before the weekly close. That would be one level to look at. And then the monthly close, which last month we just had an incredible candle, right? This was insane. This was a 44% candle. So this closed at 61.1. And again, that varies, on from exchange to exchange, but that puts us right here in this red box, an area of prior historical significance where we had, prior resistance and support flips, and where we currently see the 50-day moving average. So this would be a reasonable target. Again, whether we get there remains to be seen. Liquidity is going to paint that picture. Some catalysts that we might see between now and then would be, of course, we have economic data coming out on Thursday and Friday. Not much between now and then, but Thursday and Friday, we have GDP and jobless claims, core PCE. Those all, and Friday also, we have personal income and PCE coming. And those are, sometimes the numbers are nothing burger, but we tend to see whales playing games around the illiquidity, or thin liquidity, I should say, in the order book around those opportunities.
You mentioned that
even before
a couple
it happens.
Of times, yeah.
So this, we say liquidity dampens volatility, and thin liquidity amplifies it. So we do see that at the moment we have an opportunity for some volatility in this range. Now, adding to that, something else that is always moving the market. Fed Chair Powell speaks on Friday in the morning, and guess what? TradFi markets are closed. So TradFi, not only does that mean that crypto has the reins, it also means that ETF outflows or inflows, whatever flows, are turned off over the weekend for an extended weekend. So that also kind of opens the door for additional volatility, because we're not going to have that, whether it's ETF demand or ETF dumps, whatever it is, it's not going to be influencing the market at that time. And weekends are really when that ETF demand is on the pause button because the market is closed, is really when we start to see Bitcoin pull back a little bit frequently over the past few weekends. So that's those are all the factors that I'm considering in my decision to not ape in here above 70K, and to hopefully get an opportunity to buy somewhere in this range. Being precision in this type of environment is really, really tough. Mark and I talk about scaling in and out all the time, and this is exactly why I do that. I'm laddered down. I have bids at 69. I have bids here. I have bids all the way down, and I have bids down to dream targets. And the strategy that I use. And as you can see, we're getting tested right here. Let's zoom into that a little bit and see if we can see any moves happening. One of the things that I do when I'm laddering like this, that's not what I wanted to do. When I'm laddering like this, is to did I just move to the wrong screen? I did. I just moved off of the dash. So hang on a second. I'll take you to this chart.
Keith, on average, while you do that, I'm kind of curious. Do you mind if I ask a quick question?
Go ahead.
When you're laddering, scaling in, like there's no set amount. It just kind of depends on what sort of range you're looking to create. On average, How many do you create?
Enough that make what Mark is illustrating in Carbon sound like a reasonable proposition. Because I'm doing it manually, all right, and what Mark is showing us is doing it automatically. But the difference and the reason that I do it the way I do is, well, number one, I've been kind of developing this strategy over years, is that I'm looking at precision targets, at least in those levels, based on where a combination of my technical analysis and the liquidity, I look for where those are correlated. And I will place, sometimes maybe it's 3 or 4 bids. Sometimes at this point, I'm laddered all the way down to dream targets, and I do so on a sliding scale where my bids on the high side of that range are smaller than my bids at the bottom of the range. So I'm building that pyramid that we talk about, which makes it easier to draw my dollar cost average price down, right? If everything's big, or if everything's the same size, I'm going to end up in the middle, and there's nothing wrong with that either. This is just a methodology that I've been trying to hone over the years to try and create that pyramid shape of my position.
Nice. Speaking of your dream target, Zach wants to know what it is.
You know what my dream target is? Well, I'll show you where it is, because we've talked about a lot about where price could go from here, and we've talked about the size of the correction. This is green, but I'm taking it to the negative side. If it makes you feel better, I'll make it red, since we're talking pullbacks.
Wait, will you share your screen again? You going to share it with us?
Yes, I can.
You're not presenting anymore. So
okay.
Excuse me, Jen and Keith,
if you're going to show Zach, you offered to show Zach. Mark, do you have to drop?
I have to drop, but it's been a pleasure speaking with both of you. Keith, it's a pleasure to see you as normal, and I look forward to seeing you again next week.
Likewise. Enjoy your stay in Texas. I see you're still in the guest suite there. So here would be my dream target, and I don't think I'm sharing it with you now, Jen. I don't think that we're going to necessarily hit it.
I was looking at Zach's guess. It sounded more like Mark.
So if we were to pull back into the 60K range, that gets us right at that 20% level in the 58 to 60K range, and that's right around where the 50-day moving average is. That, I think, would satisfy a lot of analysts who are looking for that deeper correction. We've come close, but we haven't hit it yet, right? I think we're somewhere around 18% in terms of where the correction has taken us so far. Next level I would look for, if we were to lose this, would be down in that 50 to 52K range, and that is right where the 100-day moving average currently sits. And you can see we had some consolidation in this level. That's significant. That's also a 30% correction. The dream target gets us down here in this area of prior consolidation. That would be at the 44K level. That's a 40% correction. This, to me, it's a dream target because it's a chance to improve my cost basis significantly.
Of course,
but I also think that this area is the level that has really the strongest foundation for that big leg up, right? We've yet to really confirm an RS flip here at the prior high, right? We're still waiting for that. We're still waiting to see, weekly candles above this level with no wicks below. We may have indeed validated the RS flip at this 58 to 60K range. We've had some tests come close, but we had one retest down here that was legit into that range, and we were off to the races from there. So, again, based on the liquidity that we're seeing in the order book, I don't know that we're going to see this here yet. But if we do, I'm prepared for it. I have bids here, and this would be the dream target. I think it's at the moment, there's literally no sentiment in the order book to show us that. Let me get us back on board here, and I will see if I can kick that back in. Hold on one second. Bear with me, my friends.
Do you think? Yeah, you're fine. Can I chit chat with you while you do that?
Absolutely.
Okay. So while you do that, I guess I'm just curious. Before you were talking about, like, Corio was showing us his dashboard with May and September, right? How historically those are just not the greatest, right? And if you've been
Right.
here at all, you kind of know it. When you're looking at these sort of patterns and, the liquidity and things, like, you're looking to buy, you've got your bid set down to, 60-ish for the first target. Are you anticipating May at all when you're considering, like, DCAing in and, like, improving your dollar cost average right now? Or
Well,
because of the narratives pushing everything so hard right now, are you not really looking at May as the May go away?
um, that's a great question. What I'm looking at really is range by range and level by level, and at the moment
Yeah,
we have a situation where we have a monthly close coming. So I'll reevaluate things at the monthly close. We've had at the moment. I can go back to sharing. We've had 6 consecutive green candles, which is monthly candles, which has happened before. But we're on pace now for a 7th consecutive green candle, which is unprecedented. Not saying that can't happen. Not saying that can't happen at all, right? But it
yeah,
would be um, the first time. There's a first time for everything, right? So, um, could that happen? Absolutely. But I think I'm gambling a bit on the fact that we might get this retest, and if it goes red, then I'll look to see where we go from there. I do think that ultimately, that we're going to see price move up from this halving upward. Right now, whether we've seen the deepest correction or we get a deeper correction, I still think that we're ultimately, next year we're up. So
yeah,
I will, and another reason that I do this laddering the way that I do in terms of my bids, if I see price start to move against me, I can sell my upper positions without sacrificing my lower positions, right?
right.
And so I can continue to dollar cost my average, down. At this point, I've sold everything that I bought above 60K. I sold up here in the 67 to 73 range, and now I'm looking to improve on that. That was, you know, that was about 25% of my position. So I'm trying to round out this longer term position. So we'll see what the data shows me at that point. At the moment, there is no sentiment to see price go down into this 40K, 44K target, but nothing changes sentiment like price. So should we get the retest that I'd love to see, if we get this retest down here and it holds, I'm happy. If we get this retest down here and it fails, well, I will have picked up likely some coin along the way down here, which I'm at this point probably going to ride on down uh, and just you know keep dollar cost averaging my way down, because I do think ultimately we end up on the upside. We can talk
Yeah.
about what those we could talk about what those what those dart throwing targets were that we had for year end prices, but you know, I think that
I'm gonna tape it up here, Keith, because I've got it. It's a post-it, and I'm just afraid that in the next, 10 months, 9 months, that all of a sudden it's gonna lose its stick, and I'm not gonna have those targets
I don't even
anymore. I'm
remember.
gonna have to take a.
I don't even remember what I said. What was my target?
Yours was 75 to 85K.
Okay, so which is still legit, but I mean, I'd
You
like
know
to see
what,
us
though? We have 9 more months,
right
right? So we
along.
don't know and this is the end of the year. This isn't the high or anything like that. This is
Right.
how we're gonna finish out 2024. So
We've got a long way to go. So in terms of what we're seeing at the moment, and I'll wrap it with this. We do have, I'm looking at where the liquidity is concentrated. We have a ladder that has come in above the 65. It's small and faint, but I think you can see it.
yeah,
You can, I put in some contrast here, and you can see that we have some added liquidity coming into this range here, which is, obviously good. And it comes all the way down to my targets in the 60K range. So, you know what that means? To me, I interpret it as the institution that is laddering this much coin, I mean, this much cash to buy, knows no more than I do in terms of where price is going to land. And so this is how you kind of hedge your bets a little bit in terms of, where you're going to buy a little bit, buy a little bit, buy a little bit more,
Right.
buy a little bit, buy a bit, buy a little bit more. And if it breaks down and it breaks through here, then we get into buying a lot more. The key is the key is risk management and capital management, right? So you only get to take advantage of these big dips if you have any capital left to work with. So
yeah,
keep that in mind.
Keith, you're awesome.
No, you're awesome.
Okay, so website, Keith, materialindicators.com, because I want everybody to go and actually see like what this is, right? I know it's a subscription. Keith is doing a special for our audience, right? So I'll put the code here in the comments.
Yes, we're still doing that. We keep that offer open for Carbon and Bancor community members. So throw that up. I don't have the promo code handy on me, but please put that up and let people know. And as you can see right now, we're testing support here at this 70K level. So keep that in mind. There's room for price to pull back. Whether it happens or not remains to be seen. But look at this. Ask liquidity dropping down, trying to push price down a little bit. So it's a tug of war. It's a battle that's going to continue throughout the week. And I feel like volatility is going to increase through the week. And I'm watching it. I'm watching to see where the liquidity is. Maybe we get some guardrails, meaning big blocks of liquidity that come in on both sides to hold price as we approach these economic numbers and Powell's speech and the weekend close, et cetera. All of those things are visible in the order book. You can find it all, of course, at materialindicators.com, and lots of tutorials on all of these products on the Material Indicators YouTube channel. This one in particular is Fire Charts version 2.0.
I also recommend, if you are on Twitter, crypto Twitter, definitely giving them Keith, some of the videos, all of the information that you give is just amazing. So, although we do this live demonstration, Keith gives out a lot, I would say daily. I'm pretty sure you do it daily.
Yeah, I started
if not a couple times a day.
I started after after I got home from the holidays, and so since January I've been doing a daily analysis Monday through Fridays, and then we add some color in between. But I'm doing a video analysis 5 days a week, and plan to continue that as long as people are receptive to it. And so far the feedback's been great, so I enjoy doing it.
It's awesome. Okay, so I'm gonna Keith's Twitter is KA Productions, and Material Indicators is MI_ALGOS.
Yes, MI_algos.
Definitely recommend following Mark. I'll put everybody's Twitter handles here in the comments. Checking out the Dune dashboards, and Mark didn't get to show all of what Carbon DeFi is, but I encourage everyone to go and kind of explore and tinker a little bit with all the tools that our guests have shared with you. Keith, thank you so much for sticking around with me these last couple minutes. I know we went over, and I look forward to having you next week. Thank you so much.
Thanks for having me. As always, I enjoy it, and I appreciate the opportunity.
And thank you to all of the listeners also, and our viewers. We will see you next week. We do the live stream every Tuesday, 3 p.m. UTC. So we'll see you next week. Thanks, guys.
Thank you. Bye-bye.